The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this very first day of February. My pleasure to be here Monday through Friday, 11 o'clock till noon. Dow's up 19 at 19,883. S&P is down 1.5 at 2277. The composite index, I'm just moving this away. Composite index is up 15 at 5830, 5630, sorry. VIX index is at 11.71, down 20 cents. Oh, fascinating. We're also looking at the E-mini, which is down 50 cents. I believe I have to call this doji candle at 2299.50 a peak F top. That's just the way it is. See, the falling axe gave you the one-to-one expansion, the Chapman falling axe. At the same time, what we're looking at is that the price, now's the third day. Days young, got the Fed coming out at 2 o'clock. Anything can happen. But this would be the third day if it closes under 2276.60, that it closes under the 9-period exponential moving average. Not a good sign. MACD is weak. Stochastic is weak. On balance is shocking. You're all the way down there. The weekly chart is held beautifully. It says, what weakness? It's holding well. I do get a little double top in the on-balance volume. The MACD is just now beginning to see the histogram shrink a little bit, but it's still very positive. The stochastics at 96%. All of that is very good news. The 120-minute chart made a peak D with this very sharp move from the 22, what was the high? 2285, round number high. 2285. Funny, I've been watching it all the time and looking at it. Didn't actually trade it because I was so busy with other things. I did a show just this last hour with Tommy O'Brien, Tommy Jr. Really fun to work with. He's really produces an outstanding show and did it without his dad. And Tom, you got a lot of competition there. Good job. So it was fun, and we were looking at crude oil, doing different things, showing my left side, right side arch formation with the price time match, etc. But let me look at this. The object that we look for in the Chapman wave methodology is peak D. Look at that peak D in the E-mini weekly chart. Look at that sharp pullback from around about 2160. What was it? 2176. Back on the week of the 19th of August. Plunges down to the low that was made in November of 2023. Now it's in leg C and could make a peak C this week at 2299.50. But the 120-minute chart just made that A, B, C, peak D, pulls back very sharply. It's the 200-period moving average, exponential moving average at 2271.88. Went just under it, and now it's trying to bounce above it. If you're looking at the 2 minute, we just went down to the 2270.50 level. This is a leg A to the upside. If it's able to get into above this ugly bar from 2211 this morning, 2276.25, if it can get above that, that's going to be important, because then the 2278 200-period moving average becomes a target on the upside. It's a lot of ifs over there. I can just tell you this, that let's go back to the charts that we were looking at. Here's the E-mini. Look, here's the Dow, INDU. There's just a greater chance that this is... Hey, why did I not... I thought I'd finished it. Oh, there it is. That is a peak E with a down arrow, with the technicals very weak, and the price under the 9-period moving average. I shouldn't be doing this. I should wait for the end of the day. But I was talking to Tommy O'Brien about this, and I said, there's a Chapman wave technique that I had a master class on this once. It's called the silent doji. It's where the doji isn't at the high or the low. It's one bar before or one bar after. It's silent because if you did a scan, you would never see it because it's the next bar. It wouldn't be at the end. It wouldn't be at the high or the low. So it's silent. And then my rule of thumb is if it takes out on the upside, closes above that, that means you've got a directional continuation. If it closes below it, in this case, it means that you've changed direction. And that's kind of what we've seen here. So I don't know what the Fed can do, because if you're looking at interest rates, T and X.X, this is the 10-year, that's at a peak C. It's in a high-level consolidation. The monthly chart is holding the 9-period moving average. The MACD is still good. Stochastics at 81% did dive quite deeply from the 95% area. But this is really good action. To me, it suggests that yields are going to stay high for a while. That's the way it's looking right now. So that, I think, is going to give a little pressure. And remember, we looked at this. I said we've got a long way to go. Not anymore. Look, here is the trend line that goes back forever. Well, not quite forever, but real close to forever. It goes back to September of 1987, this downtrend channel. And this is a continuous contract, so it does get smoothed out. However, look, the Treasury yield is now testing that pink line. That's the first time it's done that, gone that high, since it was there back in June of 2007. This is already 10 years later. Well, not quite 10 years, almost 10 years. So this is a very important moment. And this is the reason why I've said I'm going to negate my Japanization of our bond yields, because we've got a complete change in administration, a complete change of outlook in the Fed. We might not scream to the upside in yields just yet, but I think it is a concern that your 31-year bull market in the Treasury bonds, U.S., had a peak G in July of 2016, and we are testing now the opposite of the that 10-year yield. 30-year yield's the same, but I don't want to give up yet. I don't want to say it, because after all, when you're talking about yields that have gone from a high, some of us remember 17%, 18%, certainly for mortgages. When you've gone from that high, this is a whopping increase in percentage terms. It is just minuscule in terms of what we looked at. I don't know if I can go there now. Yeah, let's just do that. I'm going to just cut out of this closed workspace. I'm going to go to my triple yield bond chart, which I show my subscribers every week in my opening call. There it is. Yeah, have a look at this. Yeah, there you are. So the chart is coming up. You see, there's that trend line. This is the shorter term weekly trend line. 30-year is white, and it made a peak E at 31.97. That's 3.197% back in December of 2016, and on the week of the 16th, and then it pulled back, and now it's retesting, but it hasn't broken out. If it breaks above, if the 30-year goes to 32.50, we're in a different ball game altogether. If the 10-year goes above, it's at right now, the 10-year is at, if I can just find the darn thing, the 10-year is at 2.5. If it goes above 2.621, if it goes above 27, 2.7, new ball game. If the 5-year, which had a high of 21.19 and it's trading at 19.67, goes into the 22.50 area, new ball game. All right, talking about ball game, we've got the papers coming up. Interesting. I'll be back. Basil Chapman, Target Conditions Hour. Dow's up 16, S&P's down $1.50. We'll be back. Talk markets.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's just get back to the bonds for a moment, then I'll continue with the different indices and commodities, etc. See the weekly chart, that 200-period moving average held, it ran up, but then it gave back a chunk. And you've gone, this is really serious. You've gone from 174.5, this is a continuous contract, so it wouldn't be exactly the same. 174.5 back in July, the week of the 15th of July, 2016, down to 147. That's 30 points. That's a 20%, almost it was about 18%. That's a whopper. I was talking about that. If you want to get yield, you don't want to see your capital get reduced by more than your yield. This is not only more than your yield, this is 10 years worth of yields. So this is serious stuff that we're talking about. And the daily chart has got a pattern that could turn into right there. It could turn into the H pattern. Yet again, there was one. Here's the second one. I would say that if that's the case, let's go to the TLT, because most people look at the TLT because they don't have the bond chart. The TLT at 118.94 says that if you close, not you, the TLT closes below 118.32. Let's say under 118, you could start to test the 117s in that H pattern in the TLT. There's no question that the TLT has to get to the 121.30s, up into the 120s. It's got to just change the mentality to be able to get to a D, and it's fading at a peak C minus if this is the case. So I'm watching yields really closely. Okay, now enough with that. What I want to do is talk about. Let me go through different things. I spoke about with Tommy yesterday. I did some of the Investors Business daily charts. If you're looking at the Facebook chart at 131.06, up 72 cents, it made a peak D. So many of these patterns have been repeating with D's and E's in the shorter term. If you want to go, I went through these NVIDIA. You remember I said NVIDIA just kind of stuck. It hasn't taken out the 119.93 high, but it's made the pattern is like a cup formation. So yeah, it's trying. I'm not sure it's going to get to a new high. I think it's going to get a stall. A, B, C could stall at any moment. Have an inside. We've seen so many inside buy modes. They went to a D underneath the previous high. It's very unusual. It's saying that the upside is starting to stall. There's a cap to the upside now in many of these stocks. Now, if you look at Apple, I had a question about Apple. Leg F gaps up. If it was a Friday going to a leg F, I'd say, whoops, you could go short, but that's not the case. It's not only that, the 120-minute chart shows that it's actually holding. It hasn't even started to pull back under the gap up low today. The low was the open 127.03. If it goes under 126.50 between today and tomorrow, that's a different ball game. If it doesn't, it could even squeak a little higher. The question I was asked earlier when I was with Tommy, we were looking at Apple, was how long before we double top at 134.54? My answer was this dashed line that we're looking at right now, if that's taken out, and Apple at 128.14 right now can close at 130.50, just it has to get into the 130s and close there, then there's no question we could actually do it in February. Otherwise, it would say June if we had a very sharp pullback, market pullback with Apple. So, yeah, it's acting extremely well. It's a very mature company. It isn't quite as cutting edge as it used to be, but it's a very good, well-run company, and that's the way you have to look at it. Okay, now let's go to back to Facebook. So Facebook is trading right now at 131.01. It's up 69 cents. Now, Facebook, they could come out with some bad news, whatever. It's still a fantastic company. But what I am looking at here is chart formations. And there's a pattern that I call the Groucho Marx eyebrow. It's like a V-shaped pattern. There's the left eye with the eyebrow, and it made a peak C, leg C in the weekly. Is it going to take it out? Unless Facebook closes above, I'd even put it at 135. Unless it closes above 135, if it just spikes up and then pulls back by Friday, I would have to put this in the category of the Groucho Marx eyebrows V-shaped pattern with a stochastic and MACD not quite being strong enough to hold the price, and it would say that it needs a little time before it can go back, and then it will go back to the highs, but it might need time. Weekly chart, A, B, C, D, E, F. This is a weekly chart. It could go to a leg F and then pull back. I got a feeling that this is not an F yet. No instant restart in Apple. Mr. Bull asks. Let's see which. I'm not sure which. You're talking about in the daily. Yeah, that would be the case of the daily. That this right there is a Chapman Wave instant restart. So this is E/B, and I'm even going to put it in E/A F/B. I won't go into the technicals now. Maybe we can do that on Friday's show. Yeah, F/B is a possibility because the MACD is good. Stochastic is at 85%. Good eye. Thank you for pointing that out. Oh, now we got Apple. You got a Facebook instant restart. Let me see. No, you can't get an instant restart. If there's a break above, it's within 4. It'll be within, by tomorrow, it'll be 5 bars. It's actually a brand new buy mode. If it spikes higher, I'm calling it E, and then leaving it at E, and we'll have to wait and see. I'm not going to get carried away with alternate fingering. Sounds like clarinet. This is the, I'm not going to alternate wave count. You just don't need it when you're going sequentially higher and the MACD is about to turn down, the stochastic's already pulling back. So it's really important. It's not how Apple does overnight. It's not how Apple does tomorrow. It's how it closes tomorrow morning. It's how it closes tomorrow and how Friday's closes. This, to me, is the most important thing in the week. Yes. So, calls, I didn't see it all. I'm sorry, got calls. I hit the wrong thing. Calls, do I see calls? I don't see anything. I'm sorry. I must have, some reason, I'm signing in again. If you could just give me the calls, I'm sorry. I'm going to say, who's waiting online? Is there someone waiting online?
Greg from
Hi,
Austin.
Greg. Hi, Greg. How are you?
I'm well, thanks. How are you, Basil?
I'm good. You'd like to look at MCIG?
Yes.
Okay. MCIG. Oh, now wait a minute. The reason why I'm looking at it, MCIG, did we discuss this the other day?
No, someone else had called in. I missed who called in, but I listened to your analysis on that, and then so I made 2 purchases on it yesterday, and I'm up nicely. So my question is I'm thinking now about just taking my profits because at least on my charts that the stochastic on the daily doesn't really look to me like it's moved as much as it should for this the last couple daily moves that it's made.
Right.
Sorry.
That's okay.
So I wanted your analysis on this, and I know it looks like it's in a gray C right now. And I thought that if I took my profits, then market pulls back, that I might be able to get it a little bit lower down. And
so wait, you have but now you have but Greg, you have 2 positions, right?
Yeah, but they're close enough together that I'm just calling it one position. Yeah.
Okay. You know what? Give me a moment here because I want to see in the 120-minute chart, is this a recycle brand new B or is it an E? So give me a moment because I do have a plan because it's acting so well. I'll be back, folks. We're looking at MSIG Inc. I did it the other day. It's a e-cigarette company. I'll be right back trading at 0.47.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, folks, we're looking at MCIG. This is like a pink slip type of stock. It is MSIG. I can't remember what they are. I've written it down somewhere. They have something else besides this. But it is a fad stock, but I think there's some substance, and that's the reason why I liked it the other day, because of the action. It said it might be looking more like a biotech, but there is validity to the price movement. I like that. It's not for everybody. Trading at 0.4745, and we've got Greg on. And Greg, so this is what I'm thinking. I went quickly to look at the price movement, and you've got volume 1,000,
Yes.
5,000, 12,000, 22,000, 4,000, 5,000. Of course, a very low price stock, 10,000, 10,000. And what I was thinking is this. First of all, if the volume was very low, I would say to you, absolutely get out of it. What I'm going to suggest to you is take one of your positions completely off, and if you put in a sell, you actually put the sell in at 0.465.
Okay.
If it doesn't get hit, it means that the buying pressure is still there, and it's within such a tiny framework that it should be easy for them to come down. But what I'm thinking is that with the buying pressure and the way the 120-minute chart is, it's almost independent of the stock market, and the way it's holding halfway into the wick. This is one of the techniques I use.
Right.
If it can hold above 4.67, somewhere around there, for the next, I'd like one more hour, so 11:30, 12:30 Eastern time. If you can go one more hour and it's still holding above halfway of that wick, there's a chance it could have a big pop into the close and could go above 0.5050, the high of the 17th. That's why I think absolutely this kind of stock, take your profits, but take your profits on one part of your position. Even if you leave just a small part as an experiment, I tell you why. When you see this kind of pressure independent of the market, it means that if you had to go to all the different news sources, you'd find that it's a cult stock, that there are a whole bunch of people, young people, old people, just piling in, and you want to go with the momentum. And the momentum says right now, take profits, keep a very tight stop on the rest of the position, and have a kind of a trading stop. You do watch it, so if you're watching it and it takes out 4.89 to 4.9 later in the day, just raise your stop and you say, what, I might get out of it later today. Otherwise, if it closes at the high, I would take it off right at the end of the day if it closes at the high, and especially if it's above yesterday, that high of the 17th.
Right.
My actual inkling is that if it closes at the high, it'll probably gap up tomorrow, but that's a risk you don't have to take because you'll be making really good money. So how about that? Take off right now, keep a little bit, trading stop, see if it can run into the close regardless of what the market does in the afternoon session.
Okay, that sounds great. Yeah, I guess when I was looking at it, I just didn't think that it would make that 50-cent mark today, that it was going to wait for a daily leg D before it got up there.
Whenever I'm looking at something and it does what I didn't expect to my advantage, I say, this is a gift. At least take some off to say, thank you very much, I appreciate it, and you can hold the rest.
Yes. All right. Well, thank you very much, Basil.
My pleasure.
Your time.
So, folks, just for those of you who are looking, I would automatically do this. I'd put the rectangle in. I meant to do it the other day. I didn't have time. I forgot. And that rectangle says it could have an inside bar. It goes to a peak D in the shorter time frame, in this case, 120-minute chart. But this leg E/B, or even call it leg /E/A, in the 120-minute chart says, hey, there is just pressure to buy. I don't know about shorting it because I don't know who'd short anything like this, but there's pressure to buy. You may as well just run it. Okay, folks, let's go to Ben in Tallahassee. Oh, Ben, I'm sorry. Ben was waiting patiently, and I was about to go to Ben. Ben, you want to look at the GDX. I'm just going to say to you, I'm sure you're listening. Sometimes you aren't able to hold on to be able to speak. What I am going to say is it went to our target in a shorter time frame. The GDX is the gold miners. We are long from the 2120 area to 2360. I love the action, but I do think that it's in a rectangle formation. And if you're looking at it, the Investors Business Daily, you've got yourself a pattern here that could call it a consolidation cup kind of formation. And I'm just suggesting to you that it might take a little while to break above 24.25, meaning a couple of days. If it does that, then that 200-period smooth moving average right there at 24.95, that would be the next target. But really the target that we've had for a long time is that double top back in the 9th of November at 25.70 to the peak C minus of the 2nd of November at 25.93. That's where we're going to have to make decisions whether we want to start thinking of adding on a pullback or taking some off. That's the big deal. Now, the support that I'm looking at, and I think there's a chance that if the dollar has a bit of a bounce, you could see 22.78 tested. I would. All I'm going to say to you is, Ben, if you are thinking about adding or subtracting, stay in your position. I just treat it as a buy and hold for now, and we'll have to reassess if it takes out 22 in the next week support. I don't think it's going to, but you know, the dollar has had a pretty vicious move to the downside. It's now in trough E. When you get to E and the MACD starts flattening out and stochastic is attempting to rally, that's when you can get a bit of a pop up. And that's what I'm thinking, that gold might pull back a little bit as the dollar tries to test that doji high of 101.02. Believe me, if the dollar instead goes to 98.50, the 200-period moving average, that's where you're going to get your breakout in the gold and the gold stocks. Ben, I hope that helped you. I'm sorry I couldn't, I took too long. But that was the analysis, and you probably are listening, but you weren't able to call in. Now, let's do a couple of other things. I didn't finish going through. Crude oil. Crude oil has had a pop, 53.62. This is really fascinating because for those of you who were let me do this, and I'll go to it's a chart I don't want to forget. This is Wood iShares Global Timber and Forestry ETF. I'm going to call this an E for now. I don't see any reason why I should call it anything else. It could go to an F, but it is testing the 69 high of February of 2015. It's gone to 56.50. It didn't break it yet. I think that could be double topish resistance. We'll see what happens, and that's very important, wood, because this is global timber and forestry. And then I've got this as an E/B in the HGX. This is the Philadelphia Housing Sector Index. Going to be very important because if it does pull, oh, Ben is back. Ben, you're back. Hi.
How you doing, Basil? Sorry about that.
Okay, I don't know if you actually heard the analysis because you might have been off.
I did not, but really my main question of the analysis, and I can certainly listen to that later, was related to interest rates. Do you see technically the GDX chart being able to, adjust or accommodate any change in interest rates, specifically if it goes up, do you feel?
Whoa, that is a very good question, and it's something that I never thought of in the context of the way you've just phrased it. I had other times, but now it was just not on my, whoa, can you hold on through the break now?
Yeah, isn't it? Today at 2 o'clock there could be something, right? Who knows?
Right, okay, so let me go through this, and we'll be right back. And this is very interesting at this time. The Dow's down 2, S&P's down almost 4. Hey, important moment. We'll be back and we'll talk about what could happen to gold and interest rates, etc.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. And that's very interesting because Ben from Tallahassee is on the line speaking about GDX. But really, his question is when the Fed makes its announcement, and there's not going to be a discussion, it's just going to be a flat-out announcement at 2 p.m., and then everybody's going to have to dissect it. What would happen if rates are going to go, if they talk about rates really quickly going higher, or maybe not doing anything for, what would the impact be on gold? So what I thought was, it's so interesting because I had put this chart together this morning early on, and now I can add to it. And what I had is the SPY, and I had different stocks to see the relative strength between those stocks and the S&P, which is that little dash, that little black line that you're looking at right now. And here is the GLD. But you see the way the GLD has made this cup formation, a little bit of a handle right there. Look at the way bonds, this is a TLT, have pulled back very sharply. So there's a little bit of a coincident pattern here. I'm excluding the SPY because it's gone to its own, it's gone to like a stair-step move to the upside. Looks a little bit toppy here and could be pulling back, but let's just deal with what we got. So all I'm going to say is if, and I'll give you the if scenario, TLT is at 119.10. It's down 1 right now. If the TLT at 119, for whatever the Fed says, if this afternoon, the Fed says whatever their statement says, and the Fed, the TLT reacts to the Fed announcement by dropping sharply, and it goes to the 118 level or lower. That's at 119.10. Then there's a chance that the GLD, because it's responded very often, what we've seen is when the rates are going to go up, we've actually seen gold go higher. But in this particular pattern, we see that there is some relationship. So all I'm going to say to you is that the GLD, let's use that because it's the one I have to use. I can't use the continuous contract. I can't mix the different indices right now and stocks. So what I am going to say is if the GLD, which is trading at 114.80, drops by a point, that'll be saying, okay, short term, be careful because gold's going to pull back. Whatever the response is, if the gold, regardless of what the TLT does, if gold actually, if the GLD spikes to 115.80, in other words, over a point from where it is now, that's going to say to you that the de facto situation is kind of what has been before, and gold is responding really well.
Hey, Basil, I guess I had those backwards. I'm sorry. I was thinking just the opposite, that, and I never did the comparison charts. So I thought when rates went up, gold went down. I guess I had that backwards for historical analysis.
You know, on a very short-term basis, unless memory is not serving me correctly, I know that when the rates have gone up, we've seen a spike in gold just for that moment. Now, I can't remember whether it's held. Someone in the den can tell me whether or not I'm correct. But all I'm going to say to you is I'd rather say whatever the statement is, if the GDX, let's go to your, because your question is the GDX. If the GDX responds by not going, but closing above 24.25, that's going to be really bullish for the gold stocks and for gold itself. So it has to be the market's response, because Peaky in the Den says correlations sometimes do not hold. And another person, P, says, I would not correlate gold with rates. I'm going to say to you, I'm just looking at the charts, and I'd prefer to say to you, my experience has been there is a momentary correlation, but it's really looking out a week or two. So I'm just going to say to you, whatever happens, I can't predict the response. I can only tell you if the response is that the GLD goes up a point. I think gold will then. I think the dollar's going to pull back sharply, and gold will move much higher.
Right, because I think because obviously rates will impact the dollar, and then the dollar always impacts gold. I think is kind of the cascade effect.
The dollar is my biggest issue right now, and we've already, with the dollar, gone into the 99s, trying to hold right now. It's not even the immediate response. It's really tomorrow. This time tomorrow, if the dollar is trading in the low 99s to under 99, gold is just going to scream to the upside. If the dollar has a bounce, and if you didn't ask me, if you didn't say to me the Fed's going to do something, if you just said to me, what do you think the dollar's going to do? I'm going to say, you know what, the dollar's ready for another bounce within its kind of a down channel that it's in, and that there's a good chance that over the next 2 days, it should be testing 100.55. That's what I would have said to you. And then I would have added, but if it went down under 99, watch out, because then the dollar's in real trouble. And that changes the weekly and the monthly. That's why I'm making a big deal out of this 99 area in the dollar.
Okay, good. Thanks a lot, Basil.
Okay, thank you. Good question. I'll have to ponder that. We'll see. We'll talk about it tomorrow. But I can't really give you an answer other than to say we have periodically seen that when the rates go up, gold has responded by going up for that moment, but I can't say it stayed up based on that particular thesis. So now what I'd like to do is this. So we did that. We've spoken about bonds. We did this. We got a question about the XLF. I'm not going to go through all the different gold bank stocks. I just think that there's consolidation going on right now. If the XLF takes out 23.87 was the high of the 16th, week of the 16th of December of 2016. It's taken all this time. The financials have held extremely well, haven't broken down, but they really haven't broken out. This kind of sideways pattern can turn into something very bullish, but it needs a trigger. If that trigger is because rates are going up today, you will suddenly see the 24.30s in the XLF, and that'll be very bullish. But you know, if you look at Goldman Sachs, it says it needs a little more time. Remember I said about 2 weeks ago, I think that peak E in the daily and peak D in the weekly just says Goldman's going to be a great stock, but it needs more time. I'm kind of staying with that, if you don't mind. XOM, question about XOM. XOM tried to bounce the other day, failed. It hit the 9-period moving average. It looks at 82.80. It's given back in that A pattern. It's gone all the way back down. It's at 82.78, down $1.11. If it closes on a weekly basis below 82, that's going to make the weekly chart really bad, and that's going to impact, I think, the XLE. Yeah, look, the XLE is in leg E to the downside, made a peak E. Now I can put a down arrow. It's past the 200-period moving average support in the weekly. I have to tell you, the more I'm looking at the market, the more I'm saying we are due for more of a correction in time and maybe price. Doesn't have to be serious, but that's what I'm thinking. That's what we prepared for my subscribers. We've prepared for that. We got prepared yesterday in an update. midday update. And that's the way I'm looking at this. Could be by 4 o'clock, I could say, oops, but that's kind of the way I'm looking at it right now. Another thing that I was asked about is there was a question about the XAL. I'd like to look at that right now. Yeah, XAL is down. I said I think that's a peak F top in the weekly. When I put this package together, I'm really not bullish other than to say, yeah, we could have slightly higher highs, but I think we're going to make lower lows. That's my scenario. That's what we've parceled ourselves for. We do have a long that we bought this morning, more kind of an experiment in the pattern that was there, and we have a long that's up quite nicely. We have, of course, the gold long, we have the GDX long, and that's doing well. I have to tell you, the action of GE makes me very worried. Look, it's down 10 cents again today. This is just not good for the market. I'll be back. Basil Chapman will have our final segment as soon as we come back. Stay tuned for these commercials, and then we'll be back. Dow's down.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So in the hour before that I was with Tommy, we looked at Apple and a number of other things. And in this hour, of course, I've gone through Facebook, etc. So we've answered some of the questions that were back. So I had a peek E in the 10-minute E-mini chart right there at about 11. What was it? 11. I'm sorry, I didn't mean 11. I meant the just before the show. All right, 10 minutes to 10. That gave a peak E, and then it crossed negative, and now you're in a trough E potential with a little bit of a bounce coming up from 2270 maybe to 2272 and then 2273 are the moving averages of resistance. But really, you need to get to 2276 to 2278. That's the big thing. So let me just make it real simple. We're talking about let's go to this now, the volatility index. The VIX index made a low this morning of 1140, and it's trading now at 1198. I suspect that the evidence is going to be that after the Fed announcement, give it a little while, but if at any point by, say, 3 o'clock, the Dow is down 40, S&P is down 7 or 8 points, if that's the case, the VIX, if the VIX doesn't go above 12.20, you might see another reversal by day's end. But my thinking is that the volatility index is just attempting with a little doji at that bottom of a few days ago, the 27th. It really is saying I'm trying my best to get a little traction. And if the volatility index, because the market pulls back by this afternoon's announcement, and the volatility index starts to go to 1250 or higher, and then trades inside this candle, the long-legged doji that you're looking at from yesterday, and goes to 1260. If it trades for 1260 for more than 45 minutes and holds there, then this market has made some kind of a short-term top and should be going down. On the contrary side, if whatever the response is to the Fed, if the Dow bounces back to the high of the day and holds there into 3 o'clock, and the VIX index is now plummeted from 12 down to 1158, the 9-period moving average or lower, then there's no question that you have to say, you know what, this is an unperturbable market, and it just couldn't care less, and it's going to try to trade back into the 20,000s for the Dow. My thinking is that we've made some kind of a top with a gap down from the other day on the 30th. And I would not be surprised if that we're going to see lower highs and lower lows, at least for the next week or two, just to consolidate these big gains. It's actually been consolidating since December the 15th with that one big spike to the upside, and now it's back again. There's a chance we could even just be in a trading band as we rotate through different sectors. GE pulls back, but you've got so maybe a triple M moves higher. Exxon pulls back. But at the same time, you've got, say, one of the other Dow stocks, an Amazon, an Apple, that goes a little higher. And that's the way rotation could be. My bias right now is to say, I think we're going to be going down shorter term. And that was, I didn't have time to do it. Maybe I'll do it tomorrow. And that's based on this Chapman Wave 5 that I'm anticipating to go below 19,784. Should do it by tomorrow. I could be wrong, but that's the way I'm looking at it. We'll see what happens. And that'll be a Chapman Wave 5 starting. And then we could, funny enough, we could then get a bounce from that level, from lower down. Just series of stair-step moves to the downside. And there's constantly something that's moving up to ameliorate the seriousness of the decline. But it's very frustrating. So you kind of have to get into position beforehand. And there's this hold tight because that's your determination. All right. So here we are. And I make it real clear, moving up from here above 19,967 in the 120-minute chart. That'll be positive. Hey, stay tuned for Kevin Hinks and all the great shows coming up today. It's Wednesday. I'll be back tomorrow. Have a great day. I'm actually off to tennis, and I'll be back in time for the Fed announcement.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.